Hey everyone, can PayPal stock reach $250 per share by the year 2030? Well, right now, as of this recording, it's trading at $60.99. So that would be more than a 4 times increase in the price per share, a 4x from here. But if I zoom out and I go 3 years back, you could see that PayPal stock price had already approached and even exceeded $250 per share. So it's understandable that some investors are asking if the stock price can hit that level again before 2030. But to answer that question, I'm going to look at more than just the company's stock price and where the stock price has been. I'm going to look at its revenue, its operating profit, its cash flow, and the valuation in terms of price to earnings, not just market price. So let's look at those figures so that we can get a closer understanding if PayPal's stock price can never hit those levels that it reached in 2021. Starting with revenue, going back 10 years, you can see PayPal has done an incredible job boosting its revenue, going from a little over $6 billion in revenue in 2015 to over $28 billion in revenue in the most recent trailing 12 months. But the question from investors has been where that revenue is coming from, because all revenue is not the same. There are some sources of revenue that are more lucrative, that come with higher profit margins, that are more sticky, that offer more growth potential, and investors are willing to pay higher prices for companies that deliver revenue from those areas. Speaking of profitability and profit margins, what I have here is PayPal's operating income in the purple, and then in the orange, I have its operating profit margin. And if you look at the operating income over the trailing 12 months, it's been going up very nicely from a little over 1 billion in 2015, almost 5 times that amount to 4.76 billion in the most recent trailing 12 months. But the thing that's been troubling investors is the operating profit margin. As PayPal has grown its revenue, it hasn't demonstrated economies in scale here. It hasn't demonstrated a steadily rising operating profit margin. Instead, it's delivered a very fluctuating, a very choppy operating profit margin over this time, going from around 16% in 2015, as high as 18.5%, and as low as 14% at one point. So it's been choppy in these areas of double digits. Investors were hoping for something better. Investors were hoping for something closer to what MasterCard and Visa have. That's the kind of potential PayPal had, is to become, and if you don't already know, Visa and MasterCard are two of the most profitable businesses in the world. Visa with an operating profit margin of over 60% and MasterCard approaching 60%. So well above the levels of PayPal. In fact, you could cut Visa and MasterCard's operating profit margin in half and it would still be well above PayPal. And so investors were hoping not that very few businesses will ever reach where MasterCard and Visa are, but at least show some improvement, show that you're getting there. After all, PayPal has over 400 million active accounts, right? Including merchants and customers, and that's been growing steadily. And that's, at one point, management thought it would reach 1 billion active accounts over the long term. They've kind of lowered that forecast and not really talked about it very much ever since their growth has slowed down. But that's the kind of thought investors had for PayPal and why the stock price had reached already $250 or close to $250 before falling to where it is today, trading at $61 per share. And cash flow from operations over the trailing 12 months in the purple here, and cash flow from operations to sales in the orange, demonstrates a similar story, albeit much worse in that the cash flow from operations doesn't show the kind of growth that the operating income shows, even in absolute terms and not in percentage terms. Its cash flow from operations in the trailing 12 months of 4.3 billion is about where it was at in 2020. So it went up and it came back down. So it hasn't shown that kind of growth that the operating income has. Meanwhile, the cash flow from operations to sales, the margin, has come down considerably since 2015. It was at over 24%, and the most recent update, it was at 15.11%. So the business's characteristics are not improving the way investors had hoped. And that's a bit peculiar since the revenue has grown. Revenue has grown nicely, but the company hasn't been able to turn that revenue growth into increases in operating profitability and increases in cash flow from operations. Finally, let's look at valuation for PayPal stock. Looking at it from a price to earnings ratio going back to 2015, you can see that investors, since the peak, right around 2021, it was trading at a price to earnings of over 90, and I would argue it should never have gotten that high. I would certainly have made that argument. But that's been coming down very aggressively, and now it trades at a forward price to earnings of just 17. The lowest it has been ever since, the lowest it has been arguably going back, at least 10 years of data here. So it's hard to say that this isn't justified, the decrease, because the business is very different than it was in 2015, right? The relationships are not there. The relationship with eBay is not there. The business composition is different. The profitability is different. The cash flow from operations is different, right? We can look back around 2015, 2016. The company's cash flow from operations to sales was well above 24%. That's come down to 15%. So that deserves a decrease, a chopping of the valuation. But I've argued, and I've been arguing all year, that this decrease is a little bit too much, and that, PayPal stock is a buy at these prices. I've been arguing that. I've placed PayPal stock among one of my top stocks to buy for several months now. I have it on that list. But that doesn't answer the question that I posed in the beginning of the headline, which is, can PayPal stock reach $250 by 2030? And to answer that question, I would say yes, it can. Yes, it can. But it needs to get focused. It needs to focus on the core of the business in attracting merchants, in attracting consumers to use their services. And in my opinion, it needs to get away from the lending products, the buy now, pay later, the merchant lending, and those types of products. Yes, they can lead to more customers, they can lead to more revenue, but I would rather the company focus on the core of just attracting merchants and consumers to use the PayPal app to conduct transactions. That's where I would like PayPal to focus. And that's where PayPal can become more like Visa and MasterCard. And that, maybe, yes, I boast about Visa and MasterCard a lot, but try to find companies with a profit margin and the type of revenue at scale, profit margin, business moat, and all the characteristics that you find with Visa and MasterCard, and I'll boast about those businesses as well. And so when you have a company that has the potential to become more like that, I would prefer they try to emulate that business model rather than emulate the business model right now, which in my opinion is going closer to Shopify rather than going closer to MasterCard and Visa, which in my opinion, I prefer the business model closer to MasterCard and Visa and further away from the Shopify business model. You might argue differently. You might say, well, there's more revenue potential in the other area. I wouldn't argue against that. Just for my preference, I would prefer the other way around. So if PayPal can focus on the core, grow those merchant accounts, grow those consumer accounts, focus on that core, I think yes, it can reach $250 per share again by 2030. All right. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.